GX30 of Egypt, that's from North Africa, had 6,942.52, while the Kenya Nairobi Stock Exchange in Kenya closed week to date at 1.0%. And of course, Johannesburg Stock Exchange at 52,217.7 level ended the week yesterday 1% uptick. That's markets just began the implementation of its T+3 settlements, moving away from the T+5 settlement. We'll be back after this short break. Thank you for staying with us. Here we keep our eyes on the OTCs, and so let's see their performances for this week. The NASD OTC saw an improved sentiment this week as the USI ended at 662.51, inching higher by 0.57% on Friday. The capitalization also closed green at 439 billion naira. There were 24 deals yesterday, and over 32 billion naira was recorded in value and of course, volume that was traded. Now, the FMDQ OTC, the impact of the Fitch Ratings downgrade on investor sentiment towards Nigerian sovereign bonds was short-lived as renewed buy interest returned during the week. And of course, we see the figures on the screen showing that the January 2026 had more interest from investor side, given 49 deals as well as 5.80 million naira invested across that security. February 2020 bonds came in with 23 deals, and of course investors took 2.30 million naira on that. March 2036 was another security, FGN bonds, that performed well, generating interest from investors by 19 deals. And the T-bills market showed June 2017, September 2016, and September, giving us deals of 36 and 30 from investors. Now, the euphoria that came with the reintroduction of the FX interbank market seems to be getting gloomy as sideways trading was seen during the week. And of course, we know that this has given several impacts to trading in the on the equity side. As we said earlier, the USI at the of the NASD OTC had the same thing with the FMDQ, seeing all of these impacts on the markets. We need to understand the reason why all this is playing out in the markets, why investors are withdrawing, why the foreign investors are still giving a wait-and-see approach to the securities that we have in the market. Of course, Mr. Ogenwoyi is still here with us, and we need to find out exactly what we've been seeing with the new FX interbank markets, the futures markets as we have it right now in the country. A lot of investors had thought that these by now will be changing changing the situation of things in the macro economy. What are your thoughts on this, sir?
Well,
sorry about that. Yeah.
You have to realize that this is just starting as a program.
Yeah.
People don't get used to things immediately. It's going to take a little bit of time before people start seeing what happens in the futures market as important. The first thing you're going to see is that people are getting used to it. It was good news last week that Citibank.
Let me allow you to take your cup of water.
Yes.
And of course, sorry about that. But then we know that this is just 1 week old in the market. You can keep it on the table. That's fine. It's just we've seen this played out for just 1 week, 7 days. It is expected to help curb round tripping, as we see at the parallel markets, yes, and of course to bring back liquidity to the system. However, a lot of clients to banks have been seeing parallel rates being charged across the counter.
Well, you see, that is something that we shouldn't worry so much about, because maybe for now, a market has, especially when you have a market like this where there's been a lot of uncertainty all along. Okay. Now they don't understand what is. The banks claiming that parallelly because they claim that, okay, they are lending you foreign exchange you get from other sources. The whole idea of allowing markets to work is that with time, you see that will disappear. The forces has disappeared, and you're seeing that the margins are shrinking between the parallel markets, and not rapidly, but it's shrinking. Many people are not speculating as much as they were doing the previous weeks. Now we are going to see a situation where the market will gradually take over. The market doesn't happen in one day. Let me give you a very clear example of what I'm talking about. If you take the situation a few weeks ago, the biggest problem in Nigeria was, what they were talking about in the agriculture sector was tomato prices have gone up because there was some bad harvest or whatever. Now, anybody who is a who is a government type, pioneer will go to the president and say, look, we need to go and import, tomatoes are flooding the Nigerian market with it. All these poor people are suffering. Will that solve the problem? No. But the fact that the prices had gone up relative to supply, tomatoes, everybody will bring tomatoes from everywhere, growing tomatoes, doing whatever they want in their garden. You're seeing that that's moderated. That's how markets work. Market will take over and smoothing the things. There will be up and down. Take the petroleum prices, for instance. Look at what is happening to petrol. Yeah. The moment the subsidies were removed, the lines disappeared. What are we seeing? We see demand going down. One of those demands is not necessarily because of those fuel that is going out of the country, as was doing before. Even within the country, imagine if we had 2 million cars. Everybody who got to petrol station wanted to fill their tanks. Today, that has halved. In a normal situation, nobody fills their tank unless they were going out of town. That kind of demand that has slowed down has affected a 40% decline, and it will continue to do that. Even the prices, in some places now you see petrol stations selling fuel at 138, 139, because they are not getting any buyers. If you go to some place in Benin, somebody wants to fill a tank, they will ask you, are you filling your tank? If you are filling your tank, we give you a 138. These are the kinds of things that markets do. Nobody, if you took all the military and the police in Nigeria and give to DPRO to monitor pump prices, they will not be able to achieve that. It's the same thing in the foreign exchange market. We are being too quick to condemn things that, it's not working. It's going to work because this is how people manage foreign, the exchange rates.
Right.
People who have, if you were a manufacturer, you have things to come. You go to the forward market and buy a spot. You are guaranteed a price. There's nothing better than that. I think we are going to see gradually come to that situation. I don't think we should worry about it for now.
Okay, between the month of May and June, a lot of things played out, a lot of reforms played out in the Nigerian economy. Yes. How do you see all of this impacting on the half year, the next half?
Very good. I think the next half year, the markets are going to be a little much better than we are looking at it now. Particularly the stock market is going to take some time because investors now begin to have confidence. Immediately have confidence in the foreign exchange market, they will now know that they can come in and go out, and therefore they are going to come back to the market. Maybe slowly, but they will definitely come back. I see the second half as better than the first half because some of the things that had plagued the first half has been taken care of gradually.
But I can bet that will result from the part of the domestic investors, not the foreign investors.
Well, you see, it will start in anything. The foreign investors start first. Let me also tell you the fact that when money is being repatriated into a country, the first money that comes into the country is the capital flight. Is the money that left the country in the first place. That's the first thing that comes back before other people see it. The investor abroad must see domestic investors making money before they start joining you.
Mr. Ngenwoyi, always a pleasure to have you on the show. Thank you so very much for your time. That's all the time we have today on the program. And this evening, I remain Temple Ashaji. We'll see you next time.